Hello and welcome to the Weekend Investing Daily Byte of 30th of August. So end of the month finally. Uh, quite a eventful month where we had some sharp drawdown at the beginning for the yen carry trade fiasco that we had. And then, of course, recovery from that bottom all the way to new highs and market stabilizing very near new highs now. So it's been a good month of gains for equities and a great close to the month today. Uh, the big Nifty 500 myth busted is today's story. We'll talk about how the weightages in big Nifty 500, CNX 500 are, you know, you 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 think of Nifty 500 as a well diversified, well, representative of top 500 stocks, but today's data is going to shake you up. So please wait for the second half of the video for that. Uh, while you're waiting, please subscribe to the channel and click on the bell notification as well. Where is the market headed? That is the question that I think almost everybody on the street asks. Anybody else who is stock market related, kya lag raha hai? And nobody really knows. I mean, that is the real answer is nobody really knows. The markets create trends upwards, downwards, sideways, and those are our only clues. Where the markets could be going. You can create predictions, you can create forecasts. It is very, very difficult to be right in your predictions and forecasts for any consistent manner. And what to talk about? I mean, 80% of active, knowledgeable, experienced fund managers also don't beat the market. So nobody really can be said to be calling the markets right unless they follow some process, unless they follow some framework, which by itself lends to profits in the markets. Anyhow, coming back to Nifty, Nifty nicely up 0.33% today and closing at a new all-time high, 25,235. It is a great way to close a week also. Last week we were just below the 25K mark, and today we've ended at 25,235. So three cheers for Nifty at an all-time high. Nifty Junior also closing the week at an all-time high. 75279 is the closing of for Nifty Junior. It has recovered from yesterday's slamp down in the morning and is closed at a new all-time high. Nifty mid caps almost there. The closing is at a new high, 0.85% up. Not yet at a intraday all-time high, but almost about there. So mid caps also gaining, and small caps sort of staying stagnant today, yet very, very close to all-time highs, up 0.5%. So the entire market from large caps to mid caps to small caps uh, gained today and gained well. Uh, Nifty Bank also gained. We have closed slightly, I would say, above this average that we have been struggling with um, at 51,351. So banks also seem to be gradually coming out of the ice age that they've been living in the last many weeks. 0.39% up on Bank Nifty. Remember, Bank Nifty is again at the same level where we were on exit poll day and much lower than the all-time high. So Bank Nifty is the laggard amongst all indices. In terms of momentum trends, you can see advanced decline ratio for the day leaping up to 331 to 167. And it's kind of reversed what it was yesterday. Yesterday it was 15 is to 34. Today it is 33 is to 16. So advanced decline is very much representative of what was happening in the market today. FII trends strong. FII buying on 29th of August also. And today, incidentally, the MSCI changes are taking place. A lot of that buying actually has already happened in front running. So we'll wait for the numbers today, but yesterday's numbers were very, very solid in terms of both DIIs and FIIs. So the fund flows continue to go into the market and not out of the market. Heat map today. Infosys, TCS slightly up. Bajaj Twins doing quite well. Reliance surprisingly post the 1:1 bonus meet announcement had sprung up. There was a very nice pattern on the charts, but I think the market is becoming very mature. They realize that a bonus is nothing but an accounting entry, and Reliance has been slammed down by 0.74% today. Maybe it will gradually inch up, but usually what happens on bonus announcements has not happened in Reliance this time. Maybe the expectation was already built in, can't say, but it is quite unexpected to see a muted performance on bonus announcement by Reliance. So all those who jumped to buy Reliance on seeing the announcement have been caught on the wrong foot. Mahindra and Eicher Motors, Hero Motors, uh, Bajaj Auto all gaining slightly. You also had Divi's Lab go up. Cipla was up. Sun Pharma was up. So Pharma has been doing well, as I've been mentioning. L&T, Bharti Airtel, and NTPC also doing all right. So overall, not a bad performance from most stocks. Nifty Next 50, you can see very mixed, but still good patches of green here. So TVS Motors, United Spirits, HAL, Bosch, Shree Cement, GAIL, DLF, ABB, Canara Bank gaining ground. Some Adani stocks, Zomato, DMart, Marico losing some ground. A mixed bag here, but overall quite remarkable how we've ended the week 5 days up. We are now, I think, about 10 days on the trot going up. So gradual 10 sessions up and one big session down. That seems to be the sort of equation in the markets now. So any day, maybe a one down day can come around. Sectoral trends, real estate after a long time has clocked 1.8% today. Monthly is still -4%, but weekly is at number two of the week. Pharma doing very well at 1.5%. Again, weekly is 3.1%. 1 month performance is 7.8%. So best performing sector for this last 1 month is pharma, and it is the second best performing over last 3 months at 22%. So amazing, comeback from pharma. Other than these two, others were pretty much nowhere, with around 0.5%, 0.2 to 0.6%. And FMCG continues to languish, which is, as I mentioned earlier as well, I mean, it is worrisome that FMCG is not participating. There seems to be some slowdown there. The K-shaped recovery is getting talked about a lot, how, margins are getting squeezed for the lower strata, and that is resulting in volume degrowth on FMCG. Um, the good part is that FMCG not doing so well and real estate doing very well shows that market uh, money is willing to take risk and not going to hiding in safer places. So that's where I would get more enthusiastic about the market. Real estate stocks doing really well. Prestige Estate 5%, Phoenix Mill 3.5%, Oberoi Realty 2.8, DLF 1.5, Godrej and Brigade also doing well. So CNX Realty, the index has started to move up, although a bit down from where it had reached, but a, a good day for real estate index at 1.83. In terms of stock spotlight, Paytm has come out with a very nice move, up 12% today. Um, it was very recently clobbered once some show cause notice was issued, but every few days or weeks there is a news event that happens in Paytm. So it is rare to see Paytm up so much, but it is trading in the gap. So gap moves can go very, very fast. So from here till about 760, 770 can be quite fast. I don't know what is the current sort of news driving this, but nevertheless, if price is going there and capital is going there, something must be on the table for it to happen, and the buck price is discounting that. In terms of longer term charts, I mean, it hasn't really helped most long term investors so far, but from very recent lows, it has certainly doubled. So if you were a falling knife picker, uh, and you were late to the party and you picked the knife in May 2024, then you've really gained. Otherwise, if you were a falling knife picker from 2022 or early 2024, you would still be in the red. Nevertheless, a good recovery. None of our strategies currently seem to be picking Paytm, but maybe after it crosses 1000, if it crosses 1000, we may see some action on Paytm. Coming to the big story of the day, the CNX 500 Nifty index, which basically tracks the top 500 market cap stocks. There are some myths around this, how the makeup of the index is, and we'll bust those. So first, uh, Peter Bernstein, who's a American educator and economist, said that diversification is not just about survival; it's an aggressive strategy to capture unexpected windfall. What he means here is that unless you will diversify those, asset classes or stocks, whichever diversification you're looking at, the unexpected, moves out of some of those can get lost if you're not diversified. So you can argue both ways against it. You may say that, you know, uh, investors can miss out on high returns due to inadequate portfolio weighing also. So this debate about how many stocks should one have, how many asset classes should one diversify in, how much to allocate, always remains complex because there are proponents on both sides. One side says, more diversification is good, something or the other will work. The other side says more concentration is good. Whatever you are picking should be your best bets, and if they perform, you'll get uh, windfall gains. But then if they don't perform, you'll get wiped out. So it is some sort of a balance that you need to create between how much to diversify and how to diversify. Now, the bias in the market weighted index, and we're talking about CNX 500, and this is sourced from the Mint, but this data is also available on NSE, is that 72.5% of CNX 500 is made up of large caps. Only 17.8% is made up of mid caps, and only 9.7% is made up of small caps. Now, if you break down the CNX 500, the way SEBI defines it is that all stocks which are in 1 to 100 category are large caps, 101 to 250 are mid caps, and 250 to 500 are small caps. So small caps are actually 50% in number, and mid caps are 30% in number, and large caps are 20% in number. Number wise, that is a distribution. So 20% of the stocks in CNX 500 are large caps, 30% are mid caps, and 50% are small caps. However, if we see the market weighted index, it has 72% large caps instead of 20. It has 17%, 17.8% of mid caps instead of 30, and only 9.7% instead of 50. So if we were to look at Nifty 500 equal weight versus Nifty 500, the index, the market weighted index, these are two very, very different animals, although they are created from the same base. I hope you are able to appreciate this point. The universe is the same. The makeup of this equal weight index is 50, 30, 20. The makeup of this market weighted index is 72, 17, 9. That is the sort of difference between the weights of Nifty 500 index and Nifty equal weight. Now, in the last 1 year, the equal weight index has moved up 52%, and the market weighted has moved up 38%. So, essentially, what this is telling you that large caps have not performed as well as mid and small caps, and in equal weights, because there was more weight to mid and small caps, equal weights has performed better. But you may say, this is 1 year performance. What is 1 year in a long term view? So you can look at long term view. In 3 years, equal weight has done 25.9 versus 21. In 5 years, equal weight has done 30.6 versus 22. In 7 years, it has done 17.3 versus 16.3, and in 10 years, it has done 16.9 versus 15.5. So, across all different frequencies of look back period, equal weight of Nifty 500 has outperformed the market weighted index. You would not have expected this, even I was not expecting this, but that's the data source is the Mint. Volatility, however, is a slightly different ball game. In 1 year time frame, Nifty 500 index volatility is much lower than Nifty 500 index equal weight, obviously because small caps and mid caps have a larger weight. But over a 5 year period, their volatilities are also kind of similar. So if on a 5 year basis, I am getting the same volatility, but I am getting 30 versus 22, why would I ever go for the Nifty 500 index? If I were to see the risk adjusted returns are amazing for Nifty 500 equal weight. Won't you agree? So Nifty 500 market weighted index is primarily a large cap index, although it doesn't seem like that. When we say that strategy is based on Nifty 500, we are actually saying that you are comparing with a large cap index with some exposure to mid and small caps, whereas Nifty 500 is essentially a mid and small cap fund, 50% at least, and 50% is large cap. So better diversified, and the risk matrix is not different over a longer period of time. Financials are dominating 27% of the market weighted index, but only 18% in the equal weighted index. So better sector diversification when it comes to equal weighted. Equal weighted index has outperformed the market weighted index across all time frames. So, that's very clear. And being bias free in weights for investment comes with numerous benefits. So, uh, like in most of our strategies, we don't have any bias for the weight. If we start with equal weights, some winners may continue to accumulate and become heavyweight, but there also we are, at some point, if they become like 2, 3, 4x of their initial weight, we will cut it back to original weight. Or in monthly strategies, several of them, we cut back to equal weight every month. So being bias free is a very good strategy. And if it is paying better, I mean, why not go for that? So uh, this whole concept of, forced weightage to certain sectors, I think is not really a good way to look at or to design your strategy. Uh, we believe very much in allowing best performers to take at least equal weight. And that's the reason why many momentum strategies will outperform a lot of the benchmarks also, because the stocks that are performing need not be from the heavyweight section of the index. It could be from the lower weight section of the index, and it usually is. So the most neglected stocks, when they turn around in that cycle and they are going to become a heavyweight in 2, 3, 4, 5 years, that journey is getting captured in several of these strategies. And once they do reach that point, they become overly mature, and potentially, they will get out of a momentum strategy. So let me know your thoughts on this subject. It is great to read your comments every day. Do like and share these videos. Do send us suggestions how we can improve. We get a lot of suggestions about Hindi channel. We will start one someday, but right now this is where we are. And thank you so much for watching. Bye.